Welcome back, everyone, to Vox Markets. My name is Paul Hill, and I'm delighted today to be able to speak to Zak Mir, one of the UK's smartest chartists and professional traders. So welcome, Zak.
I thought you were going to say something else then. I'm not quite sure smart or professional actually fits my CV, but no, it's good to be here. Great to be at Vox. I just joined last week, and it's it's a very exciting place.
Yeah, well, great to have you back, having you on board. Now, I'm a sort of like a traditional value sort of GARP investor. I'm clueless on all these things technical. And Zak has kindly offered to run me through my portfolio, sort of the really interesting sort of like the bullish and the bearish sort of stocks. Before we want to dig into those details, Zak, I don't suppose you give us a quick insights from a technical perspective of what's been happening on the markets the last 2 days. My portfolio is in red.
Well, I think actually, if you look at let's say this is the FTSE, well, that's the easiest one to look at. But if you look at that, you'll see over recent months, you've had these rug pulls almost on a monthly basis. They tend to be in the last week of the month. And then, the market then, with all the fresh money that comes in with your fund managers and everything else, the first few days of the month tend to be good. That pattern's sort of broken down a little bit since we're sort of heading towards the end of the pandemic. I think it was a very... You can almost take your watch to the last week of the month, seeing the market dip a bit. Now you've got these sort of one-off, triple-digit falls. But I think that it is basically still the same sort of, I would say, grinding higher type of move. But I mean, the other thing is to remember the FTSE's, it's been near 7,000, it's been through 7,100. And, I think although it's the same as level as it was 20 years ago, which is rather upsetting, the situation is still one of, the glass is half full rather than half empty. To get into your fundamental area, I think anytime there is a panic or a scare, the Fed just comes up with, $1 trillion here and $1 trillion there, and it's back to the normal situation. And I suppose for the small cap area, I think that's really reflecting the liquidity situation, people throwing their furlough money at the market. And I think that's going to happen at least until September.
So it's really just blowing a bit of froth off the market and buy the dips and continue with the long-term trend, which actually from a fundamentals perspective, I think is probably the right play. Now, just to sort of like frame the sort of the portfolio, there was a legendary investor, Benjamin Graham, once said that the stock market in the short term was a voting machine, meaning that sort of like sentiment drove share prices. But in the longer term, it was sort of like the fundamentals or value of a business would sort of drive prices. I sort of concentrate on the latter, but obviously you're the expert on anything sort of like short-term price action. Now, I just with my portfolio, I've got a mix of sort of big cap and small cap. I don't know if you want to quickly have a look through some of the stocks that you would say were quite interesting in terms of the most bullish moves and the most bearish moves. And we can look at it from sort of two perspectives, mine in the longer term, and obviously you predict on where the price is likely or may go in the shorter term.
I think to paraphrase or to change or maybe even improve Benjamin Graham's saying, I think in the short term, the market's a slot machine. In the long term, it should be a cash machine. I think that's probably the best. That's probably the best way of thinking about it, that, short-term traders give money to the long-term holders. And normally, unless you've picked a real dog, the value will out over time, just because the company will, gradually make more money, gradually grow and everything else. And I suppose if you've got that bit sorted, then you should be okay. But I looked at some of the epic codes you sent me, and from somebody who's a short-term person, most of them will sort of send me to sleep. So the sage would definitely send me to sleep. Even an Aviva obviously would as well. It's possibly the most boring company in the world, and so on. But let's go through one or two.
What timescales do you sort of typically look at? I mean, are you looking at a daily basis, weekly, monthly, or 3 or 4 months? I mean, my typical horizon is sort of 2 to 5 years. So that's how I try and predict a business's the share price is going to be in that sort of period. But how do you sort of like try and frame it in terms of timescales? And that might drive where we look at the first off.
I think what I try and do with I think the bulletin board here has started on Vox in the last few days, and normally it'll be a situation where I'll be calling a fast-moving stock to its target maybe by the end of this month. So it's a 2 to 4 week period. and then maybe if it's a bigger target or more slow moving situation, maybe the end of June or July. So 2 to 3 months max. But that is actually couched in the way that if I've got the the exact pinpoint entry in terms of a bounce off of moving average, or the 200-day moving average, or a bear trap or something like that, then it could be a couple of weeks. So that's the sort of, so two weeks to 2 to 3 months is my time frame. Okay. And I think that even if you're a longer term player, you'll know that you'll have a decent run on a stock over from, say, I don't know, November to January, something like that, or from March to May. Tends to be a situation like that type of time frame, even if you didn't get out and you weren't trying to job a situation. So I'm not that short term. I think maybe compared to some, there isn't the day trading stuff and things like that.
Okay, well, let's start then with something perhaps less boring, but equally may send people to sleep. But I know a lot of Vox investors have put money into it, and I've put quite a bit of money into it. Is Lloyds. I mean, it's very, very liquid. I'm pretty much confident in terms of the sort of the trajectory towards net tangible assets, which is around about 55p from current levels. What is your view? I think it'll hit 55p within the next 12 months, 6 months maybe. But what about the technicals? Is this a good technical chart? Because it obviously had a nightmare 12 months ago, and I sort of lost a lot of money, but it actually seems to be coming back quite nicely on the fundamentals.
Well, I think this chart has one or two goodies in it, and maybe I'll just run through some of the backstory here from, let's say, from August, September. I don't know how clearly people can see this, but basically, let's say the low in July there was 26p. The low in September was down to let's say
it was about 23. I'll tell you.
Yeah, so 23, yeah, so 23 and a half, and you see that low was made. There was a gap down through the previous low, so that was a gap down through 26. And so one of my rules, which tends to work quite well, is when you have a gap close. So you've had a sell gap, down gap, and then on the 25th of September, the share price closed above the gap, right? I'm
losing your sound a bit there. Can you just repeat what you said?
Yeah, so basically in September, we had the gap down through the 26 pence low.
Yeah.
And then a few days later, after it sort of fell below 20, it was below 26 for like 3 or 4 days, something like that. So you can see that on the chart. And then on the 28th of September, it closed at, let's say 26 and a half. And closed above the gap.
And what are the red and the blue lines? Are they moving averages or something?
Yeah, they're moving average, but that is actually, I mean, that obviously people say, oh, how do you get your entry point and everything else? That day was with the share price closing above the gap, the down gap, was the technical entry point, or my technical entry point on the stock. So obviously I would have been a hero if I hate Lloyds, but if I'd been looking to buy Lloyds, that's where the signal would have been. So okay. That's and I'm not. I mean, if you follow the bulletin board heroes, you'll hear me talk about a stock closing a gap. Tech Capital's just done that, I think, at 14p. So that's a live situation now. Had a down gap, let's say last month, and it's just closed above the top of that gap. So that's one of my things to look at. The other thing.
So where's it heading then? Where's the chart heading then, Zak?
Well, so where it's heading now is I've drawn this as one I prepared earlier, the trend channel. So we've got the support line there going through the January and April lows, and that line is around 44 pence.
Yeah.
Okay, and that's where the red line there's the 20-day moving average. That's around 44 pence. The top of the channel agrees with you in the sense that that's at 55 pence.
Yeah.
So that's the upper parallel. And so I'm saying, above 44, we're going to 55 or 56. And let's say the typical time frame, the guess here would be probably the earliest would be the end of next month, and then maybe sometime in July if we maintain the trend.
Well, that is amazing with the technicals and the fundamentals actually coming relatively aligned. So
we probably will both be wrong, but it's a nice try. And then the other thing here was actually the way that we gapped through that April peak at 45 pence. We gapped through that at the end of last month and closed above it, and we've never been below that 45 pence level since. So that's looking that would make me feel more confident that we're heading higher. So the warning would be if we close below 45 or 44, as I said, that the bottom of the channel, and above that up to 55.
Okay, well, you've made me sleep better tonight. Now, moving swiftly on to another big cap, and I think it's probably one of the largest on the FTSE. For AstraZeneca, it got battered, even though it put the vaccine out, etc., and then was sold off down to around about 70 quid. I think it was a couple of 2 or 3 months ago on the Europe suing AstraZeneca. But frankly, the back catalogue, the pipeline of this business is phenomenal. And its drug pipe and its drugs in just coming through to market are tremendous, really going to drive EPS. So fundamentals are perfect. And I'm sort of like, I think over the next 3 to 5 years, this business could well go over £100. Now, what's the view of the short-term price prediction or trajectory?
Well, we've got the rising trend channel that I've drawn. So that's like a theory. That's my a guess as to the trajectory of the stock. You can see that it's been quite loyal to the floor of the channel. So we've bounced off that several times. So that's good. Good as well that we're finding support at or above the 20-day moving average, the red line there. So that's another plus. When a stock's too strong to touch a moving average, it means that the bears haven't been able to. And normally you would test to support a moving average, so that's a plus. All we're waiting for here, and probably for a technical trader, I'll be waiting for an end of day close through the 200-day moving average, 200-day lines. Like below that you're bearish, above that you're bullish. Let's say, and so above 78.50, let's say, I would be looking towards what's that? Was it £90? £90 there?
Yeah, 90 quid. Yeah. Well, I think
90 quid.
I think it'll go to 100 in about 2 or 3 years' time. Do you use stop losses at all, or basically, I mean, if it breaks below certain levels, do you automatically sell, or is that where you bring a sort of?
Yeah, no, you'd have to. I mean, you'd have to say, really probably an end of day. Well, I mean, on this one, I'd really be waiting for the break of the 200-day line. So a break of the 78, 30, 40 area would be my entry point. At the moment, we could still be in. We gapped down horribly in December. And basically, we're still living in the shadow of that gap to the downside. So,
as a fundamentals, I think this one's going up, mate. Anyway, okay, so let's move it on to the house builders. One chart, Taylor Wimpey, has rocketed over the last 6 months as the vaccines have come in. And not surprisingly, people's expectations of the reopened trade and the vaccinations in the UK house building has done well. But I'm sort of like, I reckon it's hit round about my fair value, my sort of fundamentals. But what's the price? So I think it's going to sort of tread water for a bit of time. What's your view?
Well, the view here is that actually, just to go back to the Lloyds example, or that type of signal there, that we had in October. Sorry, I was drawn a funny line there. In October, we had a gap down.
Yeah,
you can see that one there. And then in November, on the 2nd of November, we closed above the top of that gap. So that was I wasn't looking at the stock then because I find Taylor Wimpey also too boring. But that entry there was a real humdinger. And that was a beauty there at £1.10.
Yeah, I didn't get in at that level. Don't worry.
Well, you should be watching these things,
I know, yeah, exactly.
I think, and so that's that situation. So that's just the sort of jobbing backwards, as you might say.
It took off in November, didn't it? That was basically when the vaccine of the Pfizer was announced. It was efficacy of 95%, and anything UK domestic economy related just took off.
Yeah, so on this one, actually, I'm probably more bullish than you are. That turnaround there in November was just, it gapped up and never looked back. And we had higher lows almost all the way across. The support line here is around £1, 73, 74? Yeah, £1.74. And so really, one would be looking for it to find support around that area and then head up towards £2. So I think, to me, this looks really, really strong. And in fact, I'd probably be, while we remain above the low 170s, I'd probably be looking for something, pretty strong there. I think it's just looking really, really good. So that's probably easily the best of the bunch so far. I think the other thing which I noticed, which is a fundamental bit of news, that Boris Johnson's going to be more lenient in terms of people building, house building, and probably, destroying the green belt and all that sort of stuff as well. to try and get the economy moving. So that might be something that if you're if you've seen that story and believe that Boris will do what he's supposed to do, what he said he's going to do, then that might be a clue as to a new leg up for house builders.
Yeah, well, I'm definitely holding because it pays a nice dividend, and I think over long term it will move forward. So I think go on. We're not too far out of line now. So let's come down the food chain a bit. Let's look at some sort of small caps. Another one, a big position I own is EQLS. That's ticker EQLS. It's basically an e-payment international sort of like straight through payments business, and it's a fintech company that's been through the mill in terms of over the last. Exactly.
I can see the mill.
Exactly, but it's now sort of like based out and coming back, and I'm really positive in terms of the long-term trajectory on this one. And it's got a large shareholder who's just sort of top sliced a bit as the prices are recovering. So that sort of like knocked the sort of some of the juice out, the price appreciation. But fundamentally, I mean, I have a price, I have a valuation of this one, and I can't remember exactly, but it's well into the 70p. And it's only currently about 43.
Right. So basically, the rising trend channel, as we see there, so the floor of the channel there around 36, 37 pence. So there might be a wobble down to that zone. But the moving at 200-day average is rising nicely. We had the gap higher in January, which was my gap entry point around 31p. And then the target here would be up to 55p at the top of that October channel. So while we're
over what time frame? About 2 to 3 months or so?
Yeah, I mean, so let's say by July. I mean, that's allowing for maybe even a test of 36, 37 first, but still up to 55. But the structure here is great because of that unfilled gap in January to the upside. So that shows that there's a handbrake turn on the price action. And it hasn't, the bulls haven't let go since then, despite your rather unhelpful seller, allegedly.
Well, I mean, you're making me feel a lot better now. But just a quick question: what's your hit rate on these ones, Zach? I mean, I've
never actually. I normally look at so many stocks every day. I haven't really looked at it, but I think that normally, normally because normally I'm saying above 36 is going to 55. So obviously, if tomorrow there's a profits warning and it goes to 25, I've given the level. I don't just say, oh, it's going to 55, and you're sort of sitting there when it's 5p and saying what happened there.
Yeah.
I think if you give targets and stop losses, it's normally I think there's a logic there. You can see the channel, you follow it, or you don't. You either believe it or you don't believe it.
So you don't know what your hit rate is?
No. I think that
you should measure it, mate.
If it was 50-50, I would be delighted.
Oh right. Oh okay, buddy. Yeah. Right.
Because I think unless you're an absolute genius or you've got some special powers, your hit rate would not be 50-50. It's just a matter of how you control your losses, and that's why I talk about it's always the stop loss area. So it's really that. It's really managing. It's really managing the losses, which is obviously you hear about people they buy the stock at 10p, they're still there at 1p. It's a long-term trade. Yeah. The whole point really is that you're not with this one. Even if I'm wrong and it's there's a profits warning tomorrow, hopefully you lose 5p. You don't lose 25p, or you're not there when it's they close the thing down. So that's
do this sort of technical stuff equally work for small caps where liquidity is less than the sort of the big boys like AstraZeneca and Lloyds and stuff? Is it because I mean obviously if there's fewer people trading it and on a daily basis, but does it still sort of like the wheels still work?
I actually think that some of the blue chips are more difficult and they're less obedient to charting rules than the small caps. So that's why I actually look at the small caps, because those are the ones which you can. I mean, I'm just looking at it. I'm just pluck one out of the air. Let's say Kodal Minerals, which I think is the hero of the moment.
Wow.
So I had an original target there of 0.25, which has been exceeded. The net, and so, but with this one here, for instance, you've got the situation with the I think the breakout was say like a break of that level there, that April peak, and so that was around 0.16, and so above 0.16 was looking for 0.25, and then you go up to you keep taking up to the next level. At the moment, say, it could go up to to 0.5 because there's a resistance line there from December. So, but you as you go along, you keep raising the stop loss of saying, above 0.25 it's going to 0.5, and then currently maybe above 0.3 it's going to 0.5, and you just keep bringing in the stop loss. But you just never sort of say it blind. Oh, it's 0.5, and then it's it's back at 0.1, and you're saying, oh well, actually tough luck, mate. Why didn't you get out? So that's really the way that it works. But
is the sort of the science behind the sort of all the charts and the stop losses and the channels and all this sort of stuff sort of human behavioural finance? Is it? That's the idea. Is so you've got people basically. They've got their own sort of like anchoring and their own sort of like imperfections when it comes to thought, and therefore using what other people are doing helps you predict where the price is heading in the short term.
Yeah, I think you can sort of see. I mean, this is like looking at a sort of a spider wading through ink. But here you can see that everybody was. Let's say people were looking at that April peak of 0.16. When it broke that, they were thinking, oh, actually, I'm going to sell because it's near the last peak in May. And so there was a little bit of a wobble there around 0.2. And then once the coast was clear and it broke 0.23 or 0.24, then they've really gone for it. Now they just think, oh, right, that's it. They've let go of the reins, and the stock probably now people have the problem of getting out too soon and thinking, oh, it's like it'll be 0.4 tomorrow, 0.5 tomorrow. Why did I get out at 0.3? So that you have that, and you can see those things on the chart. But in this case, because you have the levels, I think the levels here are much more. If it was BT, I mean, like BT is just probably the worst stock to chart. It just the way it behaves is totally. It's a very irrational type of stock. But actually, in the near term, it's been quite good. But this area here from June to November was just impossible. It was like a false break to the downside, a false break to the upside, a funny spike there, and then it came back. Just horrific. I mean, so I don't know. I'm not one for saying that
I'll tell you why that happened, Zach. Because during that period, there was lots of talk that they were going to basically sell Openreach. And that was the issue, was such that they could unlock a lot of value and get rid of a lot of the pension scheme as well equally. It obviously hasn't happened, and therefore you've got probably a more logical, because people were thinking, oh, they're going to sell it. Now they're not. They're not. And so that's what you had in the background in the fundamental perspective. Now, just before we sort of close it, because we're running a bit short of time, what is your singly the best sort of most bullish chart that you think investors might want to run the slide rule over from a technical chartist perspective at the moment?
Well, the one I like, I suppose, the best at the moment is a similar, just because, I mean, that's a stock I follow, but just because there was a bear trap there below 30p for just a few days at the turn of the month. And since then, since yesterday, it bounced to 30p, and it's just like now it should be between 30 and 45 again.
What does it do? What does A-similar do?
It's invest in technology. So it's got some of the same investments as the now suspended AAA, and I think that it's going to be like a proxy for that company. So you had the bear trap when AAA was suspended, and now this is the way that people who who are backing AAA would get exposure to those particular investments. So that's just a classic, just a bear trap situation below 30, 2-3 days, which is the typical thing.
Yeah.
It breaks support for long enough for people to get out, and then it goes all the way back up again. And so that's just a nice little, apart from the gap, that's just a nice little signal on a technical basis. You can see actually the shares gapped up in December. And they were, according to my sort of way of doing things, a buy at 25, but they've been all over the place since then. They bounced back to 25 the other week, but that's the one I think is just a simple one, and it's not too hairy.
How much does social media play in all these things? Because there's so much activity going. In fact, there's more people following you than I think than the president of the United States. So in terms of if everybody sort of gets this sort of information, is that likely to be almost short-term self-fulfilling?
It's no, but the thing is the key is to know who to follow. And if you've been on Twitter for 12 years, which I have, you basically know the top 10, 15 traders or alleged traders or influencers who actually get it right again and again.
Yeah.
And so you know that, you know, John Smith is really good on mining, so and so is really good on tech, somebody else is a broker, is a good trader, et cetera, and you know, for me it's been a real eye opener, because they just put in a tweet, you know, the fundamentals there, so you have that in a nice little package, and then you just know that from normally they get it right or normally they get it wrong, and you can, you know who's and when they say, oh yeah, you've got to fill your boots, it's going to be fantastic, you know, this is this and this and that, then you know that that those aren't people to follow.
And what about people like Elon Musk and Chapal Papatia out in the States sending the Bitcoin and I can't remember, Dogecoin to the Dogecoin to the roof? I mean, if these guys, they've got no idea about where it's going, and they just make statements, and frankly, they move the share price 20% in half a nanosecond.
Well, no, I think the beauty of the crypto area is that, I mean, it's like I've been waiting for that all my life, because that's basically a technical, it's almost entirely technical. And, you know, it's like 90% technical and 10%, you know, Ethereum is going to be used more widely now than you know, and it'll take over from Bitcoin, or you have some fundamentals there. Dogecoin is going to be the people's currency. So, you know, it's like a digital version of fiat currency. And so there's a fundamental thing there, but it's just a chart. It's a technical analyst's dream, because it goes 24 hours a day. There's no boring weekend to wait for, you know, the market to reopen. You know, you can trade at 3 a.m. It really is, and it's basically just the technical. So I think I'll just finish with the Bitcoin daily chart, and you know, you can see here that Bitcoin has been, you know, even though it's very volatile, it's basically been in a rising trend channel from December. Top of the channel currently heading towards $70,000, and you know, supporting, you know, 53,000, 54,000. So you know, what's not to like?
Brilliant, like it. And you're putting your own money into these charts and stuff like that, Zak?
I have the odd trade now and again, but normally not. Normally I'm just sitting on the sidelines, totally unbiased.
Okay, well, I'll go back to my sort of like boring long-term sort of value and gap, but I really appreciate your insights. That's absolutely fantastic, and I'm surprised at. Well, not surprised, because we're sort of complementary. You predict short-term prices, and I try and predict long-term prices, and it does look as though the actual stars are aligning on most of those that we ran through. So, really, thanks, Zak, for your time. And if anybody would like to watch Zak's daily, what's it called again? Bulletin Board Heroes. Bulletin Board. If anyone would like to watch that, it's on YouTube. So just tune in, subscribe, and you can get everything in terms of the actual charting and technicals every single day. In fact, probably 7 days a week at 3 o'clock in the morning if you follow Zak on his Bitcoin. Anyway, it's fascinating. So thanks very much, Zak.